Stock market sell-off. Should we buy the dip? This is technical analysis of the stock market's update and forecast for the trading week starting September 8th, 2020. Hello traders, I'm Richard Graham. We're going to start by taking a look at the S&P 500. We have come up to the top of this megaphone pattern that goes all the way back. Actually, we can draw the trend line back to 2012, but if we start here in 2018 and then we had this this move down and then back up to the top in the February highs, big move down into March of this year, and then we hit the top of this megaphone pattern just this week, and here we go. Here we go. Could we be coming down from here? We did hit that area, and it acted as resistance. This is the weekly candle here. If we do sell off, we could see a retest of these March lows, or possibly all the way down to 2,000 level. We should drill down to a smaller time frame. Here's the daily chart, and you can see what kind of sell-off we had. It erased a couple of weeks. For a while there, we were trying to get through this area here on the daily chart of right around 3,400. This was the area of the February all-time highs, as we can see right here. So we came up to that area. We had trouble breaking through it, but we finally did right here on August 24th, and we had quite a run-up, almost a parabolic run-up, and a lot of people were just fear of missing out. The Nasdaq was even more pronounced, which I'll show you in a minute. But then we had two big days of sell-off. In fact, the sell-off came all the way down to this level here of right around 33.50, and then we recovered quite a bit of it. If we drill down to the 30-minute chart, get a better idea what happened the last couple of trading days, everything was fine. We were going up, up, up. We hit the top of that upward sloping trend line, and we sold off hard all the way down to this area of support. And then we hesitated a bit, and then on Friday morning, we sold off hard down to this trend line, and then we had somewhat of a recovery. Now, should we go short here? Should we go long here? I don't think either one. If you're already in the market, maybe it would be a good time to take some profits. After all, I had suggested taking some profits here at the 3,400 level because that was the all-time February highs. And in my previous video, I said that if we broke through that area, we would probably come back and retest that level, and that's exactly what we have done. Now, are we going to go to the upside from here, or is it down from here? Well, the momentum is definitely to the downside. So until we start to see things turn around on the smaller time frames, I would not be long this market. After all, we're going into a time when September and October are historically the worst trading months for the S&P 500 and the stock market as a whole. So we do have that risk, and also the presidential election coming up. We saw what happened in 2016, a couple of months leading up until this 2016 presidential election. We had a big sell-off, and because there's a lot of uncertainty, people are repositioning. They're buying and selling different types of assets based on what they think is going to happen, and so you're going to see a lot of volatility due to that uncertainty. So I would expect that we're going to start to see more of a sell-off from here. However, we're going to stay with the trend until it changes. At this point, I would be neutral, and the reason is because the momentum is to the downside. We are entering that time of the year. Earnings are expected to be 20 to 30% less than what they were before. Unemployment is improving, but people are still applying for unemployment by the millions every week. So what we need to do is just follow the technicals, follow the trend. And so here on the 30-minute chart, if we can get back here and maybe retest this level, get above that level, come back and retest this area, then I would say that maybe it's safe to get back into this market. But at this point, the momentum is to the downside, and if we start to see a considerable sell-off, we could come all the way down to this level of this island reversal high back in June of about 3,200, and then this level, this key level of 3,000 that we last saw in June as well, would also be in an area that we could look for support in the market. So if we head back to the weekly chart, we can see this megaphone pattern developing, and it's possible that we could sell all the way down to the bottom of this megaphone, which would bring us to previous levels of support in the S&P 500 of right around the 2,000 level. It's a little too early to say that we could get down to those levels. That's one of the worst case scenarios, of course. At this point, we are still above the upward sloping major trend lines, including the moving averages. So I would not be going short this market at this point. However, we do have to be aware of what could possibly happen. The Nasdaq really saw a sharp sell-off as well. Taking a look at the hourly chart. Last couple of trading days on the QQQ traded all the way from about 303 all the way down to 271, and we've recovered quite a bit of that up to 286 and closed on Friday at 281. So this is a key level that I had drawn in before where we would expect to see a bounce, and that's exactly what happened. So kudos to you who were able to get in on this bounce. At this point, we're hitting this area of resistance. If we pull back on this chart on the daily, we can see this original trend line takes us all the way back to 2018, and then we hit it again at the February highs. We pierced through it finally on July 1st, and now it looks like we could be heading back to that previous line of resistance. So this is a key level we should keep our eyes on, right around 255 on the triple Qs, the Nasdaq ETF fund. Look at that volume. Here's the Dow Jones Industrial Average. In my last video, I talked about coming up and filling this gap and possibly hitting some resistance near the top of that gap, and that's exactly where we hit the resistance at 291. The Dow Jones is actually technically looking pretty good. It's still sitting above some major areas that were previous resistance, and so at this point, I'm still bullish on the Dow. We just need to repair some damage on the shorter time frames before I would feel comfortable. Like I said, the momentum to the downside is pretty strong, and at this point we could see a continued sell-off, possibly to the top of this trend line, and then bounce from there. The IWM is the ETF fund for the Russell 2000, and I would say that that's the sector of the markets that's not been performing that well. In fact, we had this island reversal right here, and we just barely broke above it here in early August, and we've had a lot of trouble. Now we're trading down below the island reversal of June. So this is possibly a bearish pattern, although we do have this support here. And so if we can stay above this area, if we break down below this support, then we're probably going to come up to there, and that might be an opportunity to get short, depending on how things look at that time. If we're still below the moving averages and they're sloping down, we're just going to have to wait a couple of days to see what happens. But if you're going to go short the market, the IWM, the Russell 2000, is the poorest performer in the stock market. So I think that would be the one to short. Just not yet. As we've said before, it's the major cap-weighted stocks that really drive the market. Here on Apple, we've had quite a run-up and we had quite a sell-off. This has taken us back to this major area of support. As long as we can stay above this area, I would remain bullish. However, we are coming up into this area of resistance right here. So it's possible we could sell off into this area of support down here. Amazon, same type of thing. We were above this upward sloping trend line for a long time, and just a couple of days ago, we broke down below it. So this could actually act as an area of resistance, so we could sell off down to this previous level. Microsoft had a big sell-off. We actually broke down below this breakout. That's not a good sign. So if the sell-off continues, we could see more downside, and maybe a measured move that's equal and takes us down to possibly 192. Google sold off hard as well. It actually went below this upward sloping trend line. Now we're back above it. So this coming week is going to be a big tell on Google. Facebook, we're still above this major area of support. That's pretty good. Tesla came back and retested this major area, so I would still be bullish on Tesla as well. However, the potential for a big sell-off is still in the cards. Bitcoin sold off hard as well. It actually pierced through this previous level of support that I had drawn in last week, and we are holding above it at this point. However, I would be cautious on Bitcoin. If we come up to this area, we could see a lot of resistance right here. I would be very cautious about Bitcoin right now. If we can get above this area, come back and retest the 11,400 level, I think we could go up from there. TLT is long-term government bonds, and we did break below this upward sloping channel here back on August 11th, and then we came down and broke below this upward sloping trend line here on August 13th, came back and retested it on August 24th. Now we're making another run to the upside, and then we had this big sell-off on Friday, so the trend is still down in bonds. Here's the 10-year interest rate, and the yield has been heading down. However, recently here on the daily chart, we see that we broke out of this triangle pattern, came back and retested it, and we're heading higher again. Could we be seeing higher rates? A little too early to tell. We do have this area of resistance that's going to be a problem that we need to get through. At the moment, though, we're still in this long-term downtrend in interest rates. Gold is still in this consolidation pattern, and this is GLD. This is the ETF fund for gold. We can draw a trend line here and see that we're holding this pattern, so these patterns generally resolve to the upside. If we break below it, we do have support here at this trend line, which would take us all the way down to about 175 or so. It's a little too early to see what happens, but the last time we had a big sell-off in the markets, we had a sell-off in gold as well back in March. And so when this market sell-offs, generally people go into gold, but when everybody rushes into the dollar, gold sells off as well. And at this point, we're still in a downtrend in the dollar. This is DXY, the ETF fund for the dollar. And as long as we're in a downtrend in dollar, that is positive for stocks and for gold and silver as well. However, if we break out of this area of consolidation, it could be explosive, and an explosive dollar like we saw in March could be detrimental to gold and the stock markets. Back to precious metals, silver is actually looking better than gold. It's holding up well. We haven't broken down. I would still be bullish. Gold, silver, and all precious metals. Just keep your eye on the dollar. Here's a daily chart of the VIX. I had talked in my previous videos about these declining wedge patterns and how they often result in a spike to the upside and a sell-off in the market. Right now we've had this spike. If we go back a few days, we can see that the VIX actually bottomed out and started rising even before the sell-off happened. This was the early warning that I had talked about last week when I said that the VIX could go higher from here. And that's exactly what happened. Now we're coming back to retest an area of support. We could go up even higher from there. Remember what happened in March? We hit 85 on the VIX. The VIX term structure is showing us mixed signals at this point. Bearish and bullish. The first month is actually in backwardation just a little bit. The second month is at 21% contango, which is considered bullish. It is elevated. We have the spot VIX at 30.75, and then we have the first month expiration coming in at 29.85, and then the second month at 36.28. So the second month here expires on October 20th. Option traders are pricing in a big move between now and October 20th. On the economic calendar this week, there's a couple of things we need to keep our eye on as we trade. Thursday, we have the initial jobless claims and PPI coming in at 8:30. At 11, we have the crude oil inventories. And then Friday, keep your eye out for core CPI at 8:30. All right, guys, so that's the picture. We have significant momentum to the downside, and I wouldn't get long this market until we see a repair of some of this damage on the short-term time frame. Otherwise, we could see a sell-off equal to the one we saw last week. If you like these kind of videos, make sure you hit the like button. Also, if you haven't subscribed, make sure you do that right now so you don't miss my next video. All right, guys, have a great week trading, and we'll see you next time.